Good morning. This is Manesh Patel from my MTF Trade. Today is March 19, I believe. I want to quickly go for a market update with you guys. It's been a couple of weeks since we did one, and the reason why is we're coming to a major timing element, March 25th. And the reason why is that there's a high probability at that point we're going to hit a major resistance, and it's a critical point to see exactly what happens. But we could sit there and experience a little pullback at that point and on the charts. So let's go through and talk about that with the charts. We'll look at the E-mini S&P 500 futures, and then we'll look at the VIX, the volatility index for the S&P 500, as we normally do, and look to see exactly where they're at. Before we begin, here's our normal disclaimer to state this is for education use only. You could read the rest here, but we are broker neutral and so forth. Today we will be using TradingView to show our charts. So let's get going. Here's a monthly chart of the E-mini S&P 500 futures, and you can see this is a bullish trending chart here, and this pretty much have gone bullish here. It pretty much went bullish right there around October 3rd of 2011. This is a monthly time frame, and you can see we've been pretty much going up. We've had these volatility spikes here, which are major pullbacks as far as the month is concerned. And you could see here the last one we had was basically December of last year. You could see even though we had the volatility spikes here going down, we still held a major support, which is the green line here. And you could see the following month here, we kind of followed through, and we actually broke this multiple time frame resistance right there and right there. So believe it or not, January of this year confirmed that we had a high probability that we were going to sit there and come retest these highs up here. There's one there and one there, and you could see we're slowly approaching this one right there. So let's go to the weekly time frame here, and you could see it coming in here. And a lot of people are looking at this level too because they're thinking it's going to be a possible head and shoulder pattern. So there's the left shoulder, there's the head, and there's the right shoulder that's starting to form if it basically holds. And that's the resistance that we're looking for it to get to, and we're kind of predicting it's going to get there by March 25th, so pretty much by next week. Or it could get there by this week. So basically the deadline to get to that major resistance is by March 25th. And at that point, we do have a high probability where we're going to sit there and possibly go for a pullback. Where is the pullback level going to be? Your levels are going to be somewhere close to about right there. Okay, and somewhere right there. Or you could sit there and get a volatility spike to pretty much these multiple time frame crosses right there. Okay, so this is the ideal pullback we're looking for, where it pulls back to about 27.39, and at that point it'll be a great buying opportunity sometime in April to go into the summer months. So that's kind of what we're looking at, and that's if everything sits there and holds here at this resistance. If it breaks it, of course, then you're betting on it going to retest the high there and to pretty much break it too, possibly, because the monthly is still strong. Okay, so let's go look at the VIX index, which is the second one. Here's the weekly chart for the VIX index. If you remember, the VIX is inversely related to the stock market, where if the VIX goes down, the stock market goes up, and the VIX goes up, the market goes down. And you could see the two zones we narrowed down. The top zone here from this support right there to that resistance is pretty much the bullish zone for the VIX, which is pretty much where the markets would be bearish. And the bottom is basically where the markets would be bullish. The further you away from this midpoint, the more that basically it's going from a consolidation to a trending. And you can see that we pretty much have entered a trending environment now, and we got a high probability of reaching that 11.5. So this matches everything that's going on with the E-mini S&P 500 futures, and it looks good for us to pretty much progress forward to that major level there. Once we get to this level here, then we're going to see exactly what happens here. But we'd ideally like to see the E-mini hit that resistance right when the VIX hits this here. If it does, that's a perfect time element because you got two instruments telling you the same thing, and that's kind of what you're looking for. Okay, so let's go down to the 4 hour, just kind of get micro and look at the trend here. And you could see it's nicely trending here. You can see that we broke out here in this red shaded area with the breakout dots right there. We held this resistance right there. You can see there was a little volatility spike there, but overall you could see the bottom of the consolidation pattern was right there, and we pretty much have held that to pretty much keep on going down, and that continues to be pretty much supporting the same thing the E-mini is telling us too. So right now your bullish opportunities, they should be having some really good reward on them. When you do get to this support here or that resistance on the E-mini, I would sit there and definitely sit there and tighten up your stops at minimum, if not take some positions off. Any bullish trades you put on when you get to that resistance and you're not profitable, I would pretty much take them off. Because if they haven't got there with the markets going up as it has, then there's a low probability that they're going to pretty much keep on going. I definitely will be looking for bearish trades, short-term bearish trades once we get to this support here for the VIX, close enough to it, and the resistance on pretty much the E-mini. If you guys have any questions, you could email us at info@eiicapital.com. Thank you.